Good evening, traders. Grab some popcorn and let's find some swing trades. It is Wednesday evening, June 24th, after the market close. It's time for the weekly swing trading video. You can see here that the market has had a little bit of a pullback over the course of the last week. We had this gap up higher last Tuesday, and ever since then, we spent time filling in this gap. We had quadruple witching, which ended up being a very nasty gap reversal, and the market closed on its low. And this week, we just haven't been able to gain any traction. You can see that there's a downward sloping trend line. Going to click GTC, going to click on the top of this candle, going to click on the top of that one. You can see that downward sloping trend line. And from my perspective, we've also breached this upward sloping trend line. That was the first line of support. But you can see that we're right here on that 200-day moving average. We dipped down to it today and rallied right off of it near the close. We're probably going to end up testing this horizontal support level at SPY 295. That's my suspicion, and that's the 100-day moving average. That is our line in the sand. If the market breaches that point right there, we've got to reel in our bullish put spread, so I'll be watching for it very closely. And I don't care if it goes down and it touches it and it bounces. What I don't want is I don't want to close below it and then another close below it, because then that resistance is going to be confirmed, and it tells us that we have to shift gears and we have to take a more bearish stance. So we need to be a little bit careful in here. I've been telling you for the last 2 weeks, since we had this blow off rally right in here, that we were overextended and we were due for a pullback. Wham! That's exactly what happened. So right now, we don't have any economic releases. We don't have any earnings releases. We're about 2 weeks away from earnings season, maybe 3 weeks away. As earnings season approaches, we're going to get some clarity. We're going to see exactly how devastating the shutdown was to Q2 earnings. And I think there could be a little bit of repricing going on at that juncture. The market's had a really big rally off of this low that we had in March, and it was within striking distance of the all-time high. What the heck? QQQ made a new all-time high. I've been mentioning that, so we know where the strength is. It's in mega cap tech. That's been the place to be. A lot of those companies, they've even benefited from the coronavirus. So if you look at Amazon and Apple and Microsoft and Facebook, all of them have benefited from people staying at home. So those are the stocks that we want to focus on if we're going to be selling out of the money bullish put spreads. And if the SPY cracks down below this major support level at 295, those stocks should gradually drift lower, but we'll have time to adjust the positions. We'll have time to get out of the way. Are we going to see anything huge, any monster dramatic moves in here with the bottom absolutely falling out? I don't think so. I know that the coronavirus cases are increasing. I know there's a lot of concern. From my perspective, what that's going to do is it's not going to be like a hammer over the head. It's going to be a very gradual recovery that we see, and we're going to see relatively lackluster consumer spending, and that is going to prolong that recovery. But we've got the government waiting in the wings. The unemployment benefits provided by the country, it's an additional $600 per week. Those extend through July. We're probably going to see them extended into August and September if the market is really, really soft and if the economic rebound is also very soft. So we had some rumblings this week about President Trump is going to start slapping tariffs on China. The trade deal's over. Now we're hearing the same thing in Europe. Forget about it. That is one thing that we do not have to worry about. He will do everything in his power to prop up this market. So he is not going to spook anyone into the election. He has been running on the 401ks growing massively and IRAs growing massively, a strong market. That's been his battle cry. He is not going to do anything to upset that. So I kind of like that backdrop. We know that the Fed is also going to continue to ease. They'll be involved in more and more quantitative easing if they need to be. They're already buying corporate debt, so corporations are fairly flush with cash. They've been cutting their dividend payments. They've been selling lots and lots of bonds right now. So they're in a pretty decent cash position. The market just needs some clarity. Typically, into earnings season, we're going to see some buying. there's going to be a pretty decent bid. But here we are, June 24th. What happens once you have, in the last quarter, once you have a market run up like this? And that run up pretty much comes from those March lows in here. So if you look at the gain from here to roughly here, portfolios are going to need to be adjusted. And what happens is that not most, but many funds need to have a fixed percentage in equities and a fixed percentage in bonds. When the equities rally like this, they have a larger percentage of exposure to the equity side. So what do they have to do? They have to sell some equities and they have to buy some bonds. So we could see that selling pressure over the course of the next week. Is it going to be devastating? No, I don't believe it's going to be. So I don't like to see market rallies that are so narrowly defined. It's been basically those 5 stocks that I mentioned earlier have been carrying the entire market higher. I don't like that. I'd like to see a much broader based rally that would be much healthier, but I don't think we're going to see that until the fall. So this fragile economic recovery is going to take time, and the new coronavirus outbreaks are going to ensure that. This is going to take time. It's going to be a process. So, what do we see in the meantime? I think we're going to see a sideways market. We'll probably come down. We may even test that 295 level. We may bounce back up to the 315 level and just kind of waffle around for the next month or so. This is the summer doldrums. So again, very low probability trading environment. We don't want to be overextended. Look in here. If you were long calls in here, here we go, everything's great. Boom, bottom drops out. Oh, that's the sell-off. I knew we were going to get that sell-off. It's time to buy some puts. So we load up on puts. Ah, dang it. Market rallied. Cover those puts. Now we're going to go back up and test the high. No, market keeps drifting lower. You cannot be out there buying premium, first of all. I know I get a lot of people asking me constantly. They want to buy calls, they want to buy puts. Not now. Right now, option implied volatilities are high. We still need to focus on selling out of the money bullish put spreads, and we need to focus on the best of the best. And on Wednesday nights, I get one little snapshot of the market, and I've got to try and find all of our picks to load us up for the week. It's pretty hard to do when you've got the market chopping around and it's directionless like it is. So that also means that you could see some videos that come out maybe on a Sunday night or a Monday like we did this week. I'm going to try and give you trade ideas whenever possible. So rest assured, if we don't get filled on our trades like last week, I'm going to continue to try and look. I'm going to continue to put videos out there. You'll always have some really decent trade ideas. So speaking of which, let's go in. The overall macro picture, neutral. Market could go down, market could go up. We've got a couple of events playing out, that being the end of the quarter. We've got earnings season coming up. So one's bearish, one's bullish. So I'm pretty neutral in here. I think we need to let the market move around. And this is the time that we have to be very, very selective with our stocks. I don't want to try and take positions on anything that's gone parabolic. So it was a little difficult finding some trades, but I've got some good ones tonight. Let's go into that 15-minute chart. Actually, we'll go into a 30-minute chart because I think that'll give us the perspective we need. Actually, 15 minutes will work pretty well. 30 minutes. I got to go to a 30-minute chart because I want to show you what the market's been doing since the last video. So this was the 17th, June 17th. So the market finished a little bit on a low note, low of the day when I recorded the video last Wednesday. And as I mentioned, for all of our positions, we needed the market to pull back. We were not chasing any stocks. I sensed that there was market weakness, and I wanted to make sure if we got any of our spreads done, we were getting in at very favorable prices. So, beautiful. We opened lower the next day, kind of closed lower for the day. Then the next day, market rallied, gapped up on the open, and sold off hard the entire day. So this was the reversal that I had mentioned on quadruple witching. That was last Friday. Then the market kind of stayed low. We had another gap up yesterday, big reversal, and today we know was very, very weak. So if I look at where the video came out last week, which was right here around that 311 level, we're down to 304 on the S&P 500. Definitely lower than where we were a week ago. Well, you would expect that we would get filled on some of our spreads, right? Wrong. The reason we didn't get filled on them was the picks were so dang solid in almost every single case. These stocks moved higher. So, what does that mean? That means that if I'm showing you some stocks on a Wednesday night, keep an eye on those stocks. They're probably going to go higher. And we've seen that time and time and time again. I'm taking a relatively passive approach, but that doesn't mean that there are not opportunities for you to take other, perhaps shorter term opportunities. Perhaps there are some day trading opportunities. Don't lose sight of these stocks. They are super, super good picks. So let's take a look at them. BYND was one of them. And if you take a look at what the stock did, BYND, there we've got the 18th right here. You could see the market was down that day. Stock went up. Then the stock went up. Then the stock went up. Well, there goes our chance to get a bullish put spread done because we need the stocks to pull back almost immediately. And when we're really short term in nature, inside of 3 weeks, inside of 2 weeks with these spreads, that Thursday and Friday are critical. If we don't get the spread done, then we're probably not going to get the spread done. And you can see that BYND is lower just a little bit, but we're not able to get that spread done because too many days have passed by and time premium decay has kept us out of that position. Well, if we were in the position, that'd be phenomenal because we'd have a really nice winner on the board right now. CRWD. This stock is higher. This stock is higher than when the video came out. Relative strength. This proves how good this systematic approach is. So, couldn't get that one off. ETSY. Oh yeah, look at that baby. That's June 18th right there. That's where it opened. We couldn't get that spread done and then whoosh, off to the races. Netflix. June 18th. Market pulls back. Not the stock. What's it doing? Continuing to move higher. PINS. There you've got June 18th. Never had a chance. Look at that rally right out of the gate. And we were watching this Thursday morning. I know some of the people in the chat room were day trading it. Congratulations. Really nice trade. You can see it's also higher than when that video came out. PayPal. There's June 18th. There's the stock. It's higher. In every single case, I think BYND was the exception. Look at SPOT. My gosh, that's June 18th. We never had a chance at that. I love that one too. Gapped higher, never looked back. Yeah, we've been day trading the heck out of this one too. So the point is, stock selection is critical. If you use a systematic approach, you can have adverse market conditions, and these stocks hold their bid. That is our edge. That's what we're working. That's why we haven't had a losing trade since the middle of February, and we've had a boatload of trades on. We do have some trades on right now. So what I want to do next, I want to shift gears a little bit, and I want to show you some of the trades that we have been able to put on. And so I'm going to move this into view. And this is our staged order screen, and I'm going to expand this as much as I can so that you can see the fields better. And there we go. So we had a couple of winners. That LVGO trade we had on forever. It seemed like it anyway because that was a 4-week trade, but we got $1.15 credit for that. That was a massive credit. That was a really nice return on that one. I believe 30%. Yeah, we had to wait 4 weeks, but we made 30% on it. Okay, no problem with that. Netflix, never even a concern. That was a beautiful spread. So winner, winner. All of these in yellow are the ones that I just showed you. Tried to get all these done last week, and I gave you 7 picks because I thought at least one of them we would get filled on. Nope, didn't happen. So that's okay. So Sunday night, I took a look, and I had 2 trades that I highlighted in a video. I sent you the link for it, and they were 2 out of the money put sales. So we were selling puts on BILI, selling puts on BZUN naked, both with the July 17th expiration date. And we were able to get these off at really good prices. So I'm going to put up BILI. And in that particular instance, we were looking to sell the June 17 $35 put. And that again came out Sunday night. You could see that is where the video came out Sunday night. That's what the stock did Monday. So these options, I think we were looking at them, the $35 puts. I think they were somewhere in the 60-cent range. Really, really got up there. We were looking to sell them for 35 cents. We're able to get 60, 65 cents. That's almost going to be a 10% profit for us. So I'm going to click trade. We'll take a look at where those options are. Yes, they're July 17s. No, we don't have weeklies on them, but you can see those options are 25 cents bid, offered at 30 cents. Really nice looking trade so far. So I'm going to go to the next one, which was BZUN. And there we're looking to sell these July 35 puts, and we're going to sell those for 70 cents. And you can see that they still today are bid at 70 cents. And let's put that chart up, BZUN. And you can see that the stock dropped dramatically. So I know you could get a lot more than 70 cents for those on Monday. If you were a little bit patient, you would have been able to do much, much better. I'm not quite sure what price, but with the stock at 37.50 and lower, I think you probably could have gotten over $1 for those. So really nice trades. And I followed up also on Monday, and I'm going to move this back into view. On Monday, I saw a nice little bullish put spread. So I put that video out and I sent it to you. And actually, this should have been a credit of 15 cents here. We're selling the Walmart July 2nd 117 puts, and we were buying the July 2nd 116 puts. And we're doing that for a 15-cent credit. And the reason that I was willing to take 15 cents for it was because we don't have a lot of time until expiration, and Walmart doesn't move a whole lot. So it doesn't carry a lot of option implied volatility. But in another week and a half, if that spread expires, we're going to generate a really nice return somewhere in the 18, 19%. I'm really good with that. So let's take a look at Walmart very quickly, and then we'll take a look at this week's picks. So what do I like about it? We have this downward sloping trend line here. That was breached to the upside, so everything was looking pretty good earlier in the week. We've got this 100-day moving average. That's our first level of support. We have this 200-day moving average. That's the second level of support. And then finally, we've got 1, 2, almost 3 tests of that 117 support level. That's our short strike price right there. So that has to fail, that has to fail, and that has to fail for us to be in trouble on this. I feel that if coronavirus becomes an issue again, Walmart has already shown how well they can do in that environment, and hence the big spike. That's the earnings announcement. Stock opened on its high and sold off the rest of the day, but their sales were incredible. So people still have to buy food, they still have to buy clothing. Walmart, I think, is going to do well if the economy gets into a hanker down mode. So I like this spread. We've got another couple of days, and then we've got to get through next week, which we've got a holiday coming up. I'm looking at really lackluster trading over the course of the next 7 trading days. So I think we're going to be really fine on this Walmart spread. And I think the market's going to have some jitters, and yeah, it may test 295 and then bounce off of that, but I think this spread is going to be in really nice shape. So if we can't get filled on anything that I show you tonight, number one, know that that's a good thing, because there are times when you have to lay low. This is one of them. We need to make sure that we're not overextended. We don't want to be out there with a lot of size and a lot of positions in case something drastic does happen. And number two, the other thing is that because this is a low probability trading environment, we're not going to have to make a lot of adjustments if the market does pull back. So We'll either get filled, we don't get filled. If I see something I like, we'll try and put some positions on. If we're carrying maybe 4 or 5 positions at any time, then I'm going to feel very, very comfortable with that level of exposure. And if you look at two stocks like BZUN and BILI, those are naked put rights. There's no stop on that. If the stock pulls back and we get assigned, we are buying the stock at that short strike price. So if BILI, we get assigned, we're going to be buying that stock at $35. BZUN, we're going to be buying that stock at $35. I'm good with that. I'm way good with that. Because I'll tell you, my game plan is the second we are assigned on that, we're going to turn right around and we are going to sell some calls at that $35 strike price. And if the stock bounces and runs back, we will get called away from us. So we will have, in essence, collected the put premium and we will have collected the call premium. We will have bought the stock at 35 and sold the stock at 35, but we will be up by those rich premiums that we've collected. Great strategy. Not unfamiliar to you because we're doing a lot of this as the market was in a free fall back in March. So I don't know if any of you cheated in the chat room, but I saw somebody post CHWY, which I thought was pretty funny because I'd seen this trade earlier, and so I put it up in the staged order entry screen. And so, yes, this is one of the trades that I like, but these are 4 trades right in here: DLTR, CHWY, BIDU, Microsoft. I don't want to chase anything. I don't want to be in anything that's parabolic right now. All of these stocks look really pretty decent. They're very stable. So I think they perform well also in any type of market pullback. So the first one I'm going to go into is DLTR, and we'll take a look at that chart. And here you can see that's the gap up after earnings, and that gap has just recently been tested during this market weakness, but the stock found support. So I really like that, and it found support above the 100-day moving average. So this stock looks really, really good to me, and I'm going to put up that option chain. And in this particular instance, we are going to lean on that $85 strike price right there. That should hold. And this stock does not move a lot. Again, Dollar Tree is the kind of store that people can go to if the coronavirus surfaces again. They were able to stay open, so business has been relatively good for them. I was looking for plays that might benefit from a resurgence in the coronavirus. So we're going to be going out to July 10. That's about 2 weeks and 2 days. So we're going to stay inside that 2-week window as much as possible. And we're going to go down to that $85 strike price. And we are going to sell the $85 put. And we're going to be buying the $84 put. And we're going to be doing that, you guessed it, for a 20-cent credit. Well, if you look at these option bid-ask spreads, that's another thing that makes trading a little bit more difficult right now. Not impossible, but a little bit difficult, is you've got a 80-cent bid-ask spread here and about the same here. So this is actually a negative 80-cent bid offered at 85 cents. So the spread is probably somewhere around maybe 10 cents I think you could get for it, maybe 20 cents. May need a little bit of a pullback on that, but the trade is to sell the July 10 85 put, buy the July 10 84 put. We're going to do that for a credit of 20 cents. So I can adjust this down, and that's already in your staged order entry screen. So if you have a brokerage interface with Ameritrade, Interactive Brokers, or with Tradier, you can simply go into the staged order screen. You can click submit, and I'll show you how to do that. You would just go over here and click submit, and that order will be routed to your broker. Now, it's going to be GTC. I suggest going in and adjusting the quantity, but at least it's very, very easy for you to go in and to make that adjustment. So there's not a lot of fumbling around. I should also mention, for those of you who are using the Ameritrade interface, I'm sorry, but we had some issues with the interface. We had so many users coming on board that Ameritrade throttled back our data, and we ended up having to apply for a commercial API license. that wouldn't be a problem, except that I couldn't get a hold of anybody there for more than 3 weeks until finally I just got on the phone and parked on the phone for 90 minutes to try and get a hold of anyone. It still took me a week after that, but I was able to get through to them. They increased our data limits by 100-fold, so we shouldn't have any issues again. And if we do, I know exactly who I need to talk to. I've been using the Ameritrade API for the last 2 days. It works great. So, my apologies for that. Wasn't documented, had no way of knowing what was going on. I only knew that we were getting a failed to initialize API error message. I had nothing to lean on, so could not identify that problem. But it should be resolved for a very long time. So our first trade, we're going to try and get this uh, DLTR bullish put spread off, selling the 85 puts, buying the 84 puts, July 10 expiration, get 20 cents for it. So that is the first trade. So the next trade that we're going to do is we are going to try and sell CHWY. I go into this screen, I get that option chain loaded. And we're going to take a look at that July 10 expiration. And there we're trying to sell the $46 put. And we're going to try and buy the $45 put. And we're going to try and do that for a 20-cent credit. And you can see that spread is 5 cents bid, offered at 50 cents. Not too far away. So I think that our 20 cents credit on this one is actually pretty doable, especially if we get any kind of little market pullback. I think we'll have a chance to get that trade off. By the way, if you're trading with Option Stalker and you trade through the option chain, if you click on the bid, it's going to assume that it is a sell to open. If you click on an ask, it's going to assume that it is a buy to open. And anytime that you would be in a position, you're going to see these boxes actually highlighted. So if we were short that, it would be a shaded red box. If we were long that, it would be a shaded green box. And if you click on the bid and the ask here to exit the trade, it's going to know how many contracts you have, and it's going to load that quantity. So on Chewy, let's take a look at the stock. Let's look at this position one more time, selling the July 10 46 put, buying the July 10 45 put, doing this spread for a credit of 20 cents. So we're going to go in, take a look at this stock. So this stock has a really nice upward trend. You can see if I connect these lines right here, it comes into play probably around that 44.80 level. Let's go ahead and do that. And by the way, make sure that when you see charts, you are using these diagonal alert lines and these horizontal alert lines on a GTC basis. Gosh, for swing trading, day trading, you've got to use them. You're looking at the chart anyway. It only takes you a couple seconds to put these lines up. And when you get the alerts, you're going to know that very important price points have been broken and that there's a very good probability that there's a trade waiting for you. So you've already gone through the work of loading these charts and looking at it and analyzing it. Make sure to drop these alert lines. Just plain alert means that it is good for the day. GTC means it is good till canceled. So if I take a look at where the stock is right here, you see this $46 support level. That used to be resistance. Then the stock broke through. Now it's support. And we have 1, 2 tests of support. And the stock has been grinding higher. Mind you, the stock has been inching higher in a down market. And you can see the bloodbath that the market took today. Stock still closed higher than it opened. Huh. Relative strength. That's what we want. This is the type of stock that we're looking for. It hasn't gotten away from us, so it's a nice stable company, nice stable stock. I think this is going to be a really nice pick for us if we can get that trade done. And I think that those prices are pretty close to us being able to get a fill on it as well. So that's the second trade that we're going to be looking at. The next trade that we're going to be looking at is Baidu. And as you know from my Sunday night video, I think the Chinese stocks are going to hold their bid fairly well right now. China's got about a 2-month lead on us as far as the coronavirus. They are having a small resurgence as well, but they're doing everything they can to contain it, and they're taking really strong measures to try and keep their economy going. So I feel the Chinese stocks are going to hold up pretty well relative to other stocks. You can see here that BIDU is well above the major moving averages, and we had this horizontal resistance level right here at the 117 level. So that was resistance. Stock gapped higher. It's been able to hold that 120 support level, and it has not filled in that gap, but it has filled in that gap. So right now, I think the stock, you can see how the stock actually held up very, very well today. That's a good sign. So what we're going to be trying to do is we're going to come down to this 200-day moving average, and we're going to sell a bullish put spread just below it. So I'm going to click the trade button, load up that option screen, and we're going to go out to the July 10 expiration, and we're looking to sell the 112 puts, and we're going to be buying the 111 puts. You can also see, by the way, in the option chain, the red dotted line, that is one standard deviation. So we're one standard deviation out, almost two standard deviations out. And then the pink line represents that 200-day moving average. If I continue to scroll down, you'll see the black line, and that's the 100-day moving average. Actually, I'd have to go a lot lower to see that. And I'm not sure where the 100-day is coming into play. But anyway, you'll see both. Actually, there's the black line. It's right on that blue line. So you can't quite see it, but that's the 100-day moving average. When you're selling spreads, visually, when you see these lines coming into play, it just gives you a little bit of additional probability of success. So if you were right at that pink line, the 200-day moving average, let's say you're looking at selling the 114, 113, you might reconsider and sell the 113 and buy the 112 and just stay further outside of it. Same thing with the standard deviations. Try and stay just outside of those lines, and you're going to increase your probability of success. So we sell the 112 put in Baidu, we buy the 111 put, and right now you can see that that is actually a negative 23 cents bid, offered at 63 cents. Well, there's a dollar between the strike prices, so we know we want to get a 20-cent credit for that, and that trade is already loaded for you in the staged order screen. We could get filled on this one. You know, it's offered at 63 cents. I think it's probably naturally bid probably at about a dime or so. So if we get a little bit of a pullback, I think the S&P futures are down 6 points overnight. With a sell-off like we had today in the futures, we will not get a good rally tomorrow until the downside is tested. Let me repeat that. Because of the selling pressure that we saw today, we will not get a decent market rally tomorrow until the downside is tested. So if we come in tomorrow and we have an opening gap higher in the market, we're probably going to see a gap reversal to the downside because there has been selling pressure today. The sellers are not going to go away. The buyers are going to be very passive until they see that downside tested and until they are convinced that there are buyers. Once they see the buyers, okay, now everybody's good. They come in and buy. So we're probably going to see a little bit of weakness tomorrow. So I think we'll have a chance to get some of these spreads off that are close in price. I like this Baidu spread. Lots of support. Support there. First support, second support, third support. Lots of support lines. The more support we have between us and the short strike price, the higher our probability of success. We're going out to July 10 on all of these. And the final one that I'm going to show you tonight is Microsoft. Now, for us to get these trades done, to be honest with you, probably going to have to get them done Thursday or Friday, because once we get into the holiday session next week, pre-holiday mode, I don't think we're going to be able to get much of anything done because you're going to see premium decay, and no one's going to be out there trying to buy spreads when they know that we're going to have lackluster trading heading into the holiday. So, Microsoft, I really like this one. I think everybody likes it. You can see this horizontal resistance line right here at about the 188 level. That was prior resistance. We broke out, then we had that little market pullback. The stock barely even flinched in here. And as soon as the market found its footing, boom, 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 marching higher. Pulled back a little bit today, but I'm looking at that line really holding well. So our trade on Microsoft, let's load up that option chain. The other thing I like about Microsoft, quite honestly, is it has not been off to the races. Yes, it's been gradually moving higher, but it is not screaming higher like some of the other tech stocks have been. So we're going to be selling the 187.50 put. We're going to be buying the 185 put. And you know that when we do that, with 2.5 points between the strike prices, we're looking to bring in a 50-cent credit. So sell the Microsoft July 10, 187.50 put, buy the Microsoft July 10, 185 put, and do that for a credit of 50 cents. So take a look at the stock once more. You can see that 188 price level right there. I'll put the crosshair up. We'll go to that 188, and you can see how that was a prior resistance level. Now it is a support level, and we're tucked just inside of it right there. So I like that. And this stock has this nice little upward trend line right here. So the first line of support is this upward sloping trend line. We'd like to see that hold. Even if that fails, we've still got some really decent support on it. So those are your trades for this week. Again, if you go into the staged order entry screen, you'll be able to see those. And those are all dated with today's date, June 24th. So they're all right at the top. I'm going to take out and I'm going to cancel all of our orders from last week. So this will be cleaned up considerably. I like that BZUN trade. I like that BILI trade. These have about 3-4 weeks left in them. I like that Walmart trade. So we got some positions working. Keep your size small. Very low probability trading environment. And trust me, I know everybody's anxious to trade. I want to trade. I love to trade. But knowing when you need to swing for the fence and knowing when you need to be on the sidelines is one of the most important things that you can know as a trader. And I'm telling you, right now is not the time to be swinging for the fence. We've got to take it very, very easy. And I know this from 30 years of experience that when the probabilities were not good, I'd be out there trying to make something happen, trying to make something happen, trying to make something happen, and I'm pissing my capital away the whole time on marginal trades. Then, when the really good opportunities come along, I have less capital to work with. Plus, my confidence is shaken because I've just come off of a bunch of losers and I'm really kicking myself because I should not have been trading when the market had no clear direction. Please learn that lesson. Please be patient. If you can learn that, you're going to be so much better off than most traders who are like a little bee going from flower to flower to flower, expecting that that's how it's going to be all the time. It's not linear like that. So, I make the analogy oftentimes of the blackjack player. He sits at the table and he counts cards and he keeps his bets very, very small until he sees the probability set up. And then he steps up and then he makes big bets because he knows the odds are in his favor. You must do the same thing when you're trading. And a lot of you ask me, how do you size your positions? That's a very critical part of it, is reading the market and knowing when the probabilities are good and scaling up, and knowing when the probabilities are not good and really pulling back and being patient and waiting for that opportunity. We haven't been buying options in a very long time, but if something awful happened and I saw a breakdown below that SPY 295 level, you're going to get an email from me. And there's a chance that we may actually be buying some puts if things got really, really nasty and ugly. I am not looking for that at all. I do not feel that that is a possibility. If I had to put a probability on it, I would say 10% or less. However, on a pullback like that, if we did get a dramatic pullback, the really, really, really good play would come in September and October on a market rebound. And that's when we could get aggressive and buy some calls. So for right now, We're going to sell some out of the money bullish put spreads. We're going to take it easy. We're not going to force trades. We're going to let the market come to us, and we'll try and grind out some income while we're waiting for some clarity. That's it for tonight. I should also mention I'm going to try and do some live events. It may take me a week or two to get that set up, but I'd really like to do a webinar. I get lots and lots of questions, so I think there are a lot of pent-up questions. So look for that. I'll make sure and send out an email. I'll also be posting a bulletin right in Option Stalker so that everyone will know when I am going to be doing one of those webinars, and it'll probably be during the weekday and it'll probably be in the evening. So I hope you're able to catch that. If you're watching this video on YouTube, I've posted it 2 days after it was recorded because I want to give members a chance to get in. Go back and take a look at all the picks that were highlighted. Take a look at the performance. Evaluate the performance, evaluate the trading system that we use, and then see if you think you might want to take the 2-week trial. Thanks so much, everybody. Make sure to turn on your YouTube notifications, subscribe to the YouTube channel, and then you'll never miss one of these videos. Good luck trading. We'll see you tomorrow morning. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.